Welcome back to Life Insurance Today. I'm your host, Edward Pritchett, and it's good to be here talking about this topic. It's a topic that we're all very, very excited to hear about it. Guess what? You're gonna die. Okay, probably not the most exciting thing to talk about, but you're gonna die. And when you die, no one is gonna be there to make decisions for you. You're not gonna be there to make decisions for you unless you do something about it. This is a message not just for you, the life insurance agent, but guys, our clients need to hear this too. So if you're looking at getting life insurance, and guess what? Most life insurance agents are clients typically of themselves. Don't just stop with the life insurance. What else are you talking and sharing with your clients, maybe with yourself, about what happens when we die? It's great to have a life insurance policy that pays our family $100,000, $200,000, $500,000, $1 million or more. However, if things aren't structured correctly, that benefit that we're leaving for our client, that benefit that we're leaving for our families, can sometimes be woefully misused. I've unfortunately seen this happen in families that I've served. I've seen it happen to a certain degree with my own family, and it's one of the things that I've proactively done to make sure that for my family, we're protected through a couple of key instruments that I want to just give you a quick rundown on. All right, I'm not giving you, this is not legal advice, this is not tax advice. All right, I'm just gonna go ahead and put that disclaimer out right now. I am not an attorney, I am not a CPA, but I've handled a lot of situations that have had to use these particular instruments. I currently act as the trustee for a family trust, and it has taught me a lot about how to make sure things are set up and planned well for using life insurance proceeds in the right way, using annuities in the right way, and then just all the other things that are part of someone's estate when they pass away. So I want to cover a couple of key things, and I have my trusty laptop. This thing goes with me everywhere. It's going to keep me on point so that I can give you the exact verbiage. All right. So I want you to, if you're an insurance agent, you want to go and look this stuff up, but then you have to spend some time with it. All right. You're not an attorney. You're not an accountant, and I never recommend you making legal advice. Like, actually, it's illegal to give legal advice without having one of those types of certifications. But you can definitely point people and be a guide to your clients so that when they have that policy in place, they can then go and talk to those other professionals that hopefully you're already incorporating into your circle so that they can make sure that they're protected. All right, you ready to jump in? I'll make it quick. I just want to hit the highlights of these three instruments, okay? So that you can, one, research it for yourself. Right? The best way that I learned to sell a life insurance policy was to make sure that I sold myself what I felt like I needed to protect my family. And I relook at it for myself just about every year to make sure that we're staying fully covered with everything that's going on. So number one, let's talk about a POA. POA, you probably see it right. POA, power of attorney. Right now, this is a legal authorization that gives an agent or attorney in fact the authority to act on behalf of an individual, which is referred to as the principal. Now, the agent may be given broad or limited authority to make decisions about the person's property, about finances, investments, and of course, we've all heard of medical powers of attorney. Now, if you're talking with a couple, you may ask them, just real briefly, like this is kind of a starting point. We're not getting into the other ones yet, but a starting point. Do you have a power of attorney? If your spouse was incapacitated, typically it's just automatically assumed, right? In some states, you may want to look for a power of attorney. Maybe the person that you're putting insurance on isn't actually legally married to the person that's going to be the beneficiary. Maybe there's some other family ties or family situations where the next of kin isn't the person that your client wants making those decisions. The only way they can determine that before something happens is to put a power of attorney in place. So this is stage one. This is that starting point. We're not digging into having a will or digging into a trust. This is just a basic formalized document, a legal authorization that gives named person the authority, limited or broad, and it can be specified out very clearly in this document to make decisions for that principal, who would in this case be either yourself or your client. Now, number two, so we have a power of attorney, but now maybe we have a lot more assets, right? Maybe we have a large death benefit that someone will be inherited. What can we do to protect more? Maybe we have a house that's being paid off by a mortgage protection policy. Maybe there's other assets like investments and property. This is where one might think of a will. If there's dependents, you may, and you probably should, have a will in place. Who's going to become the guardian of those dependents when something happens, right? If something happens while those dependents are still minors. Who's going to provide for their education, their care, so on and so forth. This is where a will gives a very clear outline of what the deceased wanted to have happen. And as long as that's been documented, certified, it's a legal will, now you can name someone to be the executor of the estate of the deceased. That person gets to make the decisions that the deceased would have wanted, and where the deceased didn't specify it, that executor gets to make those decisions of what happens next, what happens with certain funds. Now, in a will, you're going to name beneficiaries. They may be children, it could be a spouse, it could be somebody outside of that, right? Like you can make anybody a beneficiary. We've all heard the story of someone leaving the family fortune to their dog. Like you can make a dog the beneficiary. There's some other things that have to happen there, but it's possible, right? But having a will really gives our clients that ability to dictate, here's what's going to happen when. Right? And a will is something that's needed not just for large estates, but I mean, even if I have a modest estate that I'm dealing with, to have a will really gives clarity to the family and the surviving spouse of what will be happening next. One thing that I want to mention when it comes to will is probate court. Even with the will, you're still gonna have to go through probate. Probate is where they verify and say, like, this will is actually accurate, it's factual. The courts then give power to that executor to be able to go and do what needs to be done, right? Where they can use the social security number of the deceased to access accounts, to move funds around, to take care of the things that are necessary. In some places, probate's quick. In others, and maybe this is your state, it can take a long time. So how can I avoid probate? This is where the final instrument that I want to mention, the trust. Now, I'm going to have to do a whole nother series all on trust. There are so many, and when I say so many, like I've just been doing a little brief research. Okay, before I did my research, I knew about 5 or 6 different types of trust. Now that I've done just a little bit more research, I'm up to about 26 different types of trust that you can form in the United States. And I'm sure there are more, because there's just always more. This is the legal world, as you know, as we all know. They like to be able to bill for a lot of stuff. But what a trust does is, a trust is that fiduciary arrangement that allows a third party or a trustee, as I said earlier, I'm a trustee for a family trust. Not my own family, but I was externally appointed to be the trustee for a family that have been very close to and continue to be, of course, very close to. Now, the trustee holds assets on behalf of various beneficiaries to dole out as the deceased or whoever set up that trust wants to have happen, okay? So in my case, a good friend of mine named me as his trustee. I became the trustee for the family. My job is to make sure that the assets that he left, which includes homes, which includes a business, investments, those things are taken care of and done in a manner that he wished, right? To make sure that there is income provided for family members, to make sure that there's income provided for children and the care of children, and that one day the children get the opportunity to inherit what the estate has built. So a trust really gives someone that ability to make sure that if they have a very fluid, a very moving estate, and this is especially for business owners, where if something happens, your business hopefully will continue to grow and continue to have revenue and income, and decisions have to be made. This is where having a trust and a named trustee that you know can step in and do your job should something happen to you is available for you and your family. The other thing, and I mentioned probate earlier when we were talking about the wills. Wills have to go through probate, but with the trust, that trust, as soon as you pass away, the trustee already has ownership of those assets. Because while you're living, you're the de facto trustee of your trust, right? So while you're alive, maybe if it's you and a spouse, you're both the trustees. You get to direct the assets of the trust. When you pass away, that immediately transfers to whoever the named trustee that you've put into that position is, and then they're able to start running and taking care of the assets of the trust. They don't have to go through all the probate and the back and forth with the courts. So these are 3 instruments, legal instruments, that you, as a life insurance agent, hopefully you already know something about these, and you're hopefully already using some of these yourself. But we also need to make sure that we know enough about these instruments that we can be guides for our client and point them in the right direction of how they can use these instruments to make sure that what we're putting into place for them, namely the term life insurance, whole life insurance, index universal life insurance, the annuity that I help my client out with, that what they want to have happen with that when they pass away is what happens. Again, guys, this is just a primer. I hope this helps and gives you just a little bit of information that you can start using today and in your conversations with your clients, and hopefully it helps you for yourself, for you and your family, to make sure that you're taken care of in the right way. Thank you for joining us here on Life Insurance Today. We're here to empower agents with more knowledge to help them elevate themselves in this great industry that we call life insurance. Have a good one, and we'll talk to you soon.